Well, thanks for tuning in to Countdown. Quess Corp has been under pressure. The stock is down about 10% in trade, and there are a couple of issues plaguing it, or maybe one particular thing, which is highlighted in the annual report of the company as well, page 142, when they are speaking about some receivables from an entity called Trimax, with which its joint venture company or associate company entered into a development agreement in Ahmedabad. To talk about how serious this issue could be, what's the state of the receivables and what could happen ahead, Subrata Kumar Nag, he's the CEO of Quess Corp, joins us right now on the phone line. Mr. Nag, good having you. Thanks so much for joining in. You highlighted this in your annual report. I reckon this is now moving around in market circles, as a result of which the street seems to be a bit worried about these receivables. Can you clarify for us?
Yeah, I would like to, highlight a couple of things. This is the project we are doing in Ahmedabad Smart City. The project has been almost completed, and it is good to know that this project has been adjudicated as the best smart city project in India. And it won twice, not once, twice the best smart city project. The project at the final stage, we expect that it will be completed maybe another 30 days to 60 days. The government project always takes collection takes some time. The final FAT, we call final acceptance testings, are going on currently, and once those things will be over, I think the payments will come. Payment is coming from the SCADL and Ahmedabad Municipal Corporation, that is the SPV, which is created for the smart city. And we are very confident when we work with the government that it may get little delayed, but it's a sovereign. You are working with other side is a sovereign party, so there is no question or doubt in my mind about the collectibility or recoverability of this amount. I hope that in the next 2 to 3 quarters, this project will get completed and the funds will come in.
Mr. Nag, please clarify and please tell me about this issue. I think the NCLT has given a Trimax, the joint venture partner, I believe the Mumbai bench ordered commencement of corporate insolvency resolution process for Trimax. And if that is the case, the receivables for TCPIL and thereby you would be under cloud right now.
So why it is not that, let me explain to you. The project has been executed by the JV what we have with the Trimax. The entire funding has been done by us. The Trimax issues, whatever they have currently, the money or the funds they owe to the various banks. Not a single rupee from the bank finance has gone into this project. The project has been funded entirely by us and executed by us. And we have a separate arrangement, escrow arrangement with the Trimax IT. As per that arrangement, that the escrow, that money from the SCADL will be coming to a separate escrow agreement, and that money will be flow from that escrow agreement to our Quess, that JV what we have. So I don't see any issue. We are already in touch with the COC, and we put forward our opinion, and we have taken the legal opinion, and we are confident that it has nothing to do, with that the bankruptcy or resolution process what is going on at the Trimax IT. This investment is, I think, secured, and we will take whatever actions is required, even approaching NCLT to get a direction that this money should come directly to us, nothing to do with the Trimax, their own NCLT process.
Has that kind of structure worked for some of the other companies, or are you proposing something which is quite new at the NCLT league as well?
As per our legal opinion, this is, I think, standard of process. And we can get a relief from NCLT if required, and we are in the process of, we already started that process. I think that is the standard process because, the bank's money has not been used for this project. This project, the money has been used by we funded that funding, and so it has to come to us in a normal way of the way the process works.
So, okay, just a couple of things, Mr. Nag. One is the entire reimbursement of the money, whether that can happen within what time frame based on the legal opinion that you have. Can it take 2, 3, 4 quarters? Because the past 2 years have shown that NCLT resolutions don't necessarily happen at a pace at which people or related parties would like. So that is part one of my question. Maybe you answer this and then I'll ask you part two.
No, I think this is, we are already asking the direction from NCLT, and we approach the COC. This NCLT, what I am trying to say that this is nothing to do with the NCLT process of the Trimax IT. This is a separate arrangement and separate project where a Trimax IT has just worked as an intermediary company. So that is my process. That NCLT process of Trimax IT, I have no comment how much time it will take. But I am confident that within next 2 to 3 quarters, these receivables will be collected and this process will be completed.
Okay. And just one, I'm sure I have some follow-ups. My colleagues have some follow-ups too. But hello, Mr. Anag. Just a few questions, please. One is, did you a week back go to the markets to raise some money, a sum of about 50 odd crores? One, did you do that? Two, were you able to do that? If you indeed go out, did you go out to do that? And why such a small sum of money that you needed, 50 crores?
Yeah, see, this is nothing about money for which we require for running our business. We have much more cash than 50 crores in our banks today. We are well funded, and we have our debt equity ratio, if you see, 1:0.3 actually, we are 0.29 precisely. This is actually a strategic investment for one of our business. So we are building, and that's why some tie-up we are doing some strategic investment. For that purpose, this funding was coming. Nothing to do about the finance of the company. This is some other initiative what we are working on. The board actually asked a few clarification what we are working on, and we'll go back to the board very shortly, hopefully, and we'll see what is the real reason for raising this fund.
Okay. Mr. Nag, we understand that the board has deferred the fundraising plans. I'm just going back to the receivables which are outstanding. You've given it a time frame of next 2 to 3 quarters. Let's say worst come, if you don't get that money through the account you're talking, is the company looking to make any provisions? Are you working towards that, or would you wait for the next 3 quarters and wait for the money to come first?
What I was, referring, this money is, the receivable is from a government body. I do not have any doubt in my mind that why this money will not come to us. If you go to the Ahmedabad, you will see the project is in full progress. You will see the surveillance cameras, you will see the command and control center, you will see the display board what we have put. This is in the smart city, which is adjudged as the best smart city in India, and that project we have done. Government project takes some time, and they are going through the process, and we are confident that we'll get the money. It is not a private party we are discussing here. We are discussing the organization which is a sovereign government organization. So I have no doubt that there is a iota of doubt in my mind that this money will be have any chance of getting not getting paid.
Mr. Nag, there is some fear in the markets because your company's stock has been declining this week, and that too very sharply. You've given it a time frame. Could you confirm what's the receivable amount? That's 150 crore, right?
In total, around 150 crores. Okay,
150 crore. Just one more thing.
And understand one thing. Last year also, this project, we got 54 crores. The total investment almost 200 crore. Out of that, around 56, 50, just less than 60 crore has already been collected from this project. It's not that we have not collected any money from this project. It's an ongoing project. Fund goes and money gets collected. So it's not that no money has been collected from this project. 60 crore, around 60 crore has already been collected.
Okay, I'm just going back with regard to what's happening to the stock right now. And if I look at the shareholding, you've got some key mutual funds on both. 6% shareholding is with the mutual funds. FPIs hold around nearly 12 to 13%. Have you got a chance to engage with any of your marquee shareholders as to if somebody is selling your shares in the market?
I think, yeah, we are in touch with our, prominent shareholders. I don't think they are, selling their shares or reducing their holdings. And some of the mutual fund under pressure of redemption may have sold some shares. I think this is a short phenomenon. I think there is some misconception and perception has gone into the market about this, Trimax and also this fundraising, particularly this fundraising thing, as it was deferred. And I think in that liquidity crisis in NBFC and other things, people are thinking something else. What I want to say is that it has nothing to do with the financial health of the company. It is just a strategic investment, and we will be able to disclose. I think it will be a much more positive for the company than anything too negative.
You're confirming there are some mutual funds who would have sold the shares in the market?
No, I think some. I do not have exact age. I think some of the cases in a few years, I think they did under a few weeks back. But current one, I do not know. We can check when we have the exact information.
Mr. Nag, just one final set of questions. As I read a note that I have with me, on 31st March 2019, the resolution professional handling the insolvency process for Trimax has acknowledged 151 crores as debts due to TSIPL. Now, I would guess that both TSIPL and Trimax are not government entities but private entities. Am I correct, sir?
Yeah, sure.
So therefore, the money that is due to Quess Corp is indirectly due from the government agency to Trimax and from Trimax to Quess Corp, right, sir?
Yeah.
So therefore, the money due to you is not necessarily directly from the government agency. If the Trimax insolvency or the resolution process takes a really long time, you do not get the money, right, sir?
No, that's why I was trying to say that this two process has to be seen in a two different light. That's why we have been trying. We are working with the government and also working with the resolution professionals and the COC that this is nothing to do with the current NCLT process of the Trimax IT. The project was awarded to the Trimax IT and then it was subcontracted to the JV what we have. So, and the funding was done by us completely. So it was not the loan or funds Trimax IT got from the banks has been used for this project. So that's why has nothing to do with the NCLT process of the Trimax IT. So that is the point we are trying to establish here, and we are hopeful that we will be able to do that.
Hi, Mr. Nag, just one question. While we're talking about Trimax and their NCLT proceedings, even if they were to get the money from the government agencies, what I would like to try and understand is, do they have any other external obligations which they may have to then fulfill and which may not directly mean that that money is a pass-through to you? Probably a follow-up to my colleague's question.
No, that's why we have a separate escrow arrangement to avoid all these funds to get clubbed with the Trimax overall. We have a separate arrangement with the bank when with the all of us are a party to that, and as per that agreement and arrangement that whatever the funds will come from the schedule will come directly to the escrow account, and from that escrow account 99% of the money, 1% for the Trimax shares, so that will go to the Trimax. So the 99% will come directly to the JV. So that is the understanding. So when the money will flow in from the government, I think that escrow arrangement and the agreement what we have will kick in that fashion.
What you're saying is, irrespective of whatever happens, you'll still get your money back. All right, just one last question, probably not related to this, but something else that's weighing down, on market sentiment is, what is the game plan for Monster, and how would you see that shaping up? Because that is also a money guzzler at your end.
I think the Monster, is a great name and great asset, and we have high hope for the Monster to be turned around. We got the monster in 15 months back. It is last year or 12 months. It took some time to work on the product on the monster. It is coming up. If you see that today's monster, there has been a tremendous change and improvement. What used to be 15 months back, the search engine, the number of jobs, the number of CVs, everything has, all the KPI have been increased substantially. Now, last year, I think, it took some losses, but it is around 20-25 crore. I think the way it has been working and as per our plan, I'm very confident that the Q3 or Q4 max to max of this FY20 will be able to have a operating break-even in months.
All right, we'll leave it at that. Mr. Nag, thanks so much for taking the time out and being with us today. Some news updates on your screen now. NCLAT has rejected Prashant Ruiya's objection to ArcelorMittal's bid. Remember, Prashant Ruiya had moved the NCLAT against this Essar Steel takeover by ArcelorMittal, but I think from the looks of it, this has been rejected. NCLAT says that COC has no role in distribution of the asset. I guess that's what the flash is saying. We'll get in voices on this to talk about the importance of this. Is important one. I mean, one from the verdict perspective that has come in, and two from what happens to the steel space as well. We've heard a number of times in the past about how a CEO or two has come out and said that keeping ArcelorMittal out is probably a priority as well for the incumbents. This might not go ahead as that. So a couple of important monitorables out here, but the news bit is that NCLAT has saying that the COC is no role in the distribution of the amount, and they're rejecting Prashant Ruiya's objection to ArcelorMittal's bid. Ruiya had challenged the orders of the Ahmedabad branch of the NCLT, which had, remember, approved the 42,000 takeover plan of Essar Steel by ArcelorMittal. So it seems that ArcelorMittal now, I mean, this might be a step before the final step or might be the final step, but seems like there's one more slot cleared for ArcelorMittal to have that takeover of Essar Steel.
This is going to really do something for the competition within the industry once a big giant like ArcelorMittal actually steps up the game domestically.
Yeah, I remember in a conversation with Mendonca, Sajjan Jindal at Davos had said that, why wouldn't anybody want to keep a strong, powerful global hand like ArcelorMittal out of the way? Nowhere connected to this, by the way, is Sajjan Jindal, but that conversation seemed to suggest that this wouldn't have worked out well. Now, it seems that is one more step cleared, and the rejection of Prashant Ruiya's objection seems to be, and the issue is, of course, decided by the Supreme Court as well. So, interesting verdict. We'll get in some voices to talk about this. Wonder what's happening to the steel space as well. Just mark some of the steel companies to just show you what's happening within that pocket as well. Not that there's an immediate impact on any of the others, Tata Steel or JSW Steel or otherwise, but this is an important verdict nevertheless. In moments from now, we'll get in my colleague Payaswini Upadhyay to talk about the importance of this and get in a battery of experts to speak about this as well. Okay, Payaswini is with us. Payaswini, how important is it?
It is important from the point of view of ArcelorMittal crossing an important hurdle in its plan being upheld by the appellate tribunal. But to be clear, in the earlier order in April as well, the NCLAT had hesitated to stay the ArcelorMittal plan. But the contentious point so far was how the money that is coming in from ArcelorMittal has to be distributed amongst the various financial and operational creditors. Now remember that the bid amount of ArcelorMittal is 42,000 crores and Standard Chartered, the original financial creditor along with SBI, who had filed for the insolvency of Essar Steel, was contesting all along that the allocation that the COC or the creditors of committee has done and the formula that they have used is unfair. They had stated that against their claim amount of nearly 3,400 crore, the resolution plan had allocated only 60 crores to Standard Chartered. That works out to be a 1.7% recovery. Compare that to the financial creditors whose recovery rate in the allocation plan that was approved by the COC was as high as 92%. Now, Standard Chartered Bank had argued that in spite of, the bank being a secured financial creditor, it was being discriminated against by the majority members of the COC. Now, the argument that Stancy had made in NCLT and the NCLAT was that the dues weren't being based on the proof of admitted claims on a pro rata basis, but they were being determined on the value of securities that each creditor had. Both the NCLT and the appellate tribunal had given a sympathetic ear to this argument of Standard Chartered and the operational creditors as well. And the NCLT had suggested that the COC approve a 85-15% allocation. That is, 85% of the bid amount goes to financial creditors and the remaining 15% distributed between operational creditors. The NCLAT, that is the appellate tribunal, had said that the COC can consider a 90-10 ratio. We have Nilang Desai from AZB joining us on the phone line now. Nilang, we just have a two-line verdict from the appellate tribunal that they have upheld the resolution plan of Arcelor Steel, but in one line they have said that the COC doesn't have any role to play in the allocation amount. What do you make of the NCLAT decision?
Well, that's curious because I was under the impression that the determination of allocation is, a combination of the discussion between the applicant and the COC, subject to, of course, legal requirements and equity, etc., etc. So the COC doesn't, then it seems that the responsibility must fall somewhere, and that then must be the resolution applicant, which I think puts him in the same tricky situation as the COC found itself earlier. So I'm not sure what to make of it just yet. Maybe the order will give a little more sense of it.
Nilang, if you recall, the NCLT had only made a suggestion as to the percentage of allocation, emphasizing that it's leaving the allocation conversation or the decision to the COC, or rather the commercial wisdom of the COC, and hence it had not specifically directed the COC, and it was in the form of an observation and advice. How does the NCLAT saying that the COC has no role to play in allocation changes things for umpteen matters, where it's the COC who essentially decides in what shape and form the resolution plan needs to be approved?
Correct. No, so I think maybe better to discuss this once we have a sense of the order rather than relying on a one line to make sense of it. But I suppose the decision of allocation has to be made by somebody. It can either be the COC or the applicant or the court. I can't immediately think of anyone else who might be making that decision on allocation. And if it's not going to be the court, which, I don't think wants to get into commercial issues, and it's not going to be the COC, I think the only person left is the applicant, which I think, puts him in the same situation as the COC was to make, delicate balance calls, who to give more to, who to give less to, etc. And I think they'll suffer from the same issue of trying to interpret the law.
Correct. And also, if I can point out, ArcelorMittal's counsel did point out before the Supreme Court and the NCLAT that, look, we are giving you this amount and we have got nothing to do with this allocation. So you slice it and dice it in a fashion that you, the COC, will like, because the same challenge can be, pitted against the decision of the resolution applicant itself that, hey, you are giving more to the financial creditor or the secured creditor as opposed to, let's say, the operational creditors. So we're not really solving this problem by saying that the COC, can't decide on allocation. And if I can add, the NCLAT has also said that employees and those operational creditors whose claim is less than 1 crore will get 100% of their claim. So this is, the NCLAT taking a socialist approach towards, let's say, those who don't have as much say in the process, and now deciding on the commercials, essentially.
Again, I think we'll have to look at the order to see exactly what it's saying. But, I suppose if the NCLAT is saying that they must get 1 crore, so those who have claimed under 1 crore must get in full, then that does seem to be, an equitable issue which the NCLAT has thought to rule on.
Well, there are conflicting actually sort of flashes coming out from the NCLAT, because I believe the appellate tribunal is still reading out its judgment, because now I think a changed flash says that it's those employees and operational creditors whose claim is less than 1 crore to get 60% of their claims. We'll get the final number as and when the final order is out. But Nilang, broadly speaking, if this is the approach of the courts, is there anything that the regulator or the government can do to rectify the situation? Because I do believe that this will be appealed by one or the other party in the Supreme Court, and this is not really the end word, the last word on this matter.
Right. I mean, I have to say that I completely get the social angle and the angle of equity. I think from the perspective of the system, as in any system, what would be useful to have is clarity and certainty. In this deal, 60%. In another deal, it may be possible to give 60%. In yet another deal, it may be possible to give 100%. So what is the test that an applicant in a COC needs to apply in each case in order to distribute? I think if there's enough clarity on that, we don't need to go to the courts to ask the question and get these answers over extended months.
Yes, because that was going to be my question, because I believe the bankruptcy code in itself is fairly clear on what decisions the COC can or cannot take, and I believe that the NCLAT has gone into that sort of decisions that the COC can or cannot take, which we'll of course find out in the final order. But in your understanding, does the IBC, the law as it stands today, gives the absolute power to the COC, or was there some, let's say, ambiguity around it that now the court has had to step in and give this order?
Well, I think the Supreme Court is quite clear that courts should not interrupt the commercial or interject in the commercial wisdom of the COC, and I think therefore on that point the COC should continue to have a call. I don't know whether to say that the COC's absolute power is entirely the right thing, because they don't. I mean, they have to comply with the law, they have to comply with equity, they have to be reasonable, etc., etc. But commercial wisdom, the Supreme Court has said, a couple of times now, should not be questioned. So I think that balance should be struck by each court to ensure, balance of equity while at the same time not challenging the commercial wisdom.
And does this now open the door for probably cases where the plans have not been submitted to the NCLT, and even if they have been submitted, for now to aggrieved parties who feel they have not got enough from the pie to now contest allocations in various ongoing cases, Nilan?
Well, I think, as you say, right, that if it is the case that this case moves on to the Supreme Court, then we'll have hopefully a clear view there as to how this must be done. And I think once the law is settled, I think those who feel aggrieved may or may not choose to try and get an extra pound of flesh.
Okay, Nilang, we'll come back to you as and when we have more information coming in from the NCLAT. Thank you for joining us with your quick views. Back to you guys on the market.
It may not be that great news for the creditors then, because what I can see, SBI has got like 13,000 exposure. So the verdict says only 60% can be recovered from here.
No, we have sort of some confusion around that number because the claim, or rather the parties that were contesting the allocation were from the large umbrella financial creditors.
Sure.
Standard Chartered was a part of that. And then on the other hand, you had operational creditors that had basically your vendors and your employees, etc. So these were the two groups that were contesting. But yes, largely, given that 92% of the recovery was coming to financial creditors, that included SBI, this judgment is not really favorable to them because now the allocation math is now going to have to change based on what the NCLAT has laid out in its final order.
Okay,
all right.
I think thanks a lot, Paisni, for getting the details. I just want to pull up the stock of SBI. I think that's seen some bit of correction after this verdict. Paisni, I think we've also got Shardul Shroff online.
Yes, hi Mr. Shroff. This is Paisni from the Mumbai studio. Thank you for joining us. We have very limited news coming out of NCLAT, and I understand, sir, that your firm has been advising the creditors committee. What do you make of the NCLAT decision saying that the creditors committee cannot play a role in allocation of the amount between various creditors?
I think the general feedback I have got from the NCLAT my lawyers are there, partners are there, is that it appears that the judgment as it's been written is conclusive as far as the participation of the ruya, because the court has held that that part of the story is really completed in October, and there is no question of getting a second round or a second bite at the cherry. Insofar as the distribution issues and the rewriting of, in a sense, of the resolution plan, clearly that, in my view, they have gone beyond the ambit of the law, and they have replaced the scheme as if they have the power and authority to amend or modify a scheme, which in my view is not permissible, because the jurisdiction of the NCLT is only based upon consent. And if the consent has been granted in a particular way, the court or the tribunal does not have power to amend the consent and represent the scheme, because that does not have either the sanction of the resolution applicant, nor does it have the sanction of the COC. If they voted on the basis of A, you can't substitute the voting on basis A to basis B, because then there is no consent. You have not really taken a vote nor a decision or a judgment based on whether this is acceptable to the set of creditors who are entitled to vote, namely the committee of creditors. So this is bound to go up in appeal.
Okay, Mr. Shroff, as I understand, the NCLAT has said that financial creditors would get 60.7% of their claim as opposed to 92% what they had decided on, and this is even lesser than what from the oral directions or suggestions that the NCLT and NCLAT had made earlier.
Yeah, so therefore they have basically substituted their judgment as if this was the judgment of the committee of creditors, and that is completely wrong. And in those circumstances, this decision is bound to be appealed, and the logic which is contrary to the basis of how charges are created and how the charges are proved as against the liquidator or as against the resolution professional will be looked into in accordance with what we believe is the law. And if it is not the law, then the creditors will be free to choose as to whether to wind up the company. Because if they are not going to get what they expect to get out of this process, then the question of participating in a process which destroys their claim or reamends their expectations will have to be looked extremely differently, and this will have a far-reaching impact on foreign applicants or persons who are going to be into resolution making and financing of such schemes, because if this is the logic that they're going by, we will be the only country which will have this kind of logic, and we cannot in today's time behave in this particular way. We are not capable of resolving the entire bunch of non-performing assets without external capital. And if this principle that has been articulated by the judges is contrary to the global principle, it will mess up the whole application of the law. Maybe the judiciary or maybe the judiciary would interfere in the Supreme Court, or alternatively there will have to be legislative changes, and only then will we be in a position to really invite investment in this sphere.
And I believe, Mr. Shroff, the ongoing cases will get impacted too, because anybody now aggrieved can go and challenge the allocation that the CSE has decided upon. And where does now the court stop? What rationale, or let's say a standard that does the court now start applying? Somebody can argue why 60%, 55% should be enough, or 67% should be enough. So, I mean, what has the appellate tribunal opened the doors to?
Exactly why I'm saying that what was a consensus-based jurisdiction, namely the power to grant a scheme, was based upon the vote on the scheme. You have basically substituted your vote for the vote of the creditors. Now, that's not the law. It is for the creditors to make a judgment as to what is acceptable to them, and the creditors by consensus have to do it at 75 or 66%. The creditors have done so, and the judges now change this. How is that possible? Then it breaks the consent, and therefore they would reject it. A normal meaning, if it's substituted and contrary to the decision of the creditors, it will amount to a case of liquidation.
Okay. Mr. Shroff, if you could just leave the facts of this case aside, if you just look at the IBC, to your mind, is it very clear that it's the COC that decides how the distribution should be done? When I say how, I mean the methodology that needs to be employed, whether it is based on the security or on the amount of claim, etc., or any other method. And two, the percentage that should be allocated to each creditor. To your mind, is the IBC very clear that this decision making lies with the creditors committee?
No, I would pause here, Pahasin. Today, the question of the committee of creditors deciding the distribution is wrong for the reason, and I explain why. It is the resolution applicant with the information memorandum who knows how the priorities are put to the inspection of the register of charges. So the resolution applicant, neither the committee of creditors nor the court really decides the question of how the resolution applicant wants to propose based on the facts of the charges that are registered, which goes before the committee of creditors. It is not something which the committee of creditors dictates. It is what the resolution applicant, based on the facts of the case, who proposes that this is the way I intend to pay, and also mentions that the distribution will be in accordance with the principles of whether the charges are pari passu or the charge is secondary and the first charge holder gets in priority to second charge holder. So that is fact bound. It is not a matter for the committee of creditors to change their priority. It is not a matter of the court or the NCLAT to change that priority. It is based, the jurisdiction of how they are paid is based on the resolution applicant, which in turn is based upon the priority of charges as recorded with the registrar of charges, with the registrar of companies. There is a specific method by which when and if a charge is created, it has to be registered. That charge registration binds the liquidator, because if this company were to go into liquidation, that is the way in which it will be paid. Now, a resolution applicant also decides this same basis as the basis on which the payments would be paid, with the principles of priority being kept intact. When a resolution applicant and the committee of creditors participate, they don't participate on the basis that their charges are destroyed. Their charges continue in the way they were registered, and the scheme and the committee of creditors has to operate on the principles of their charges and priority of the charges. So this whole concept that I can rewrite the charges as a national company law appellate tribunal NCLAT is completely wrong, because the process of resolution does not rewrite the charges.
Understood. Thank you, Mr. Shroff, for sharing with us your quick perspective. And as you said, some of this might end up in Supreme Court very soon. Neeraj, that's all that we have on this case now. Of course, we'll come back with more analysis as and when the appellate tribunal's order is made public.
Thanks, Paswini. And it's had its impact on the markets as well, aside of course, what it does in terms of a verdict that is coming from NCLAT. Look at all the banking names. And we need some clarity out here. Paswini, of course, thanks so much for this. But we need some clarity out here, because if indeed not just the operational creditors, but if the financial creditors have to take a 60% of the haircut, and some of it was provided for, then maybe there could be a case for write-backs for some of these banks as well. But let's not preempt and try and preempt this. BOB, PNB, a bunch of others have fallen. Let's get a banking expert and talk about it. But Arun Thukral, MD and CEO of Axis Securities, joins us right now on the show. And maybe just ask him a thing or two if he has any views out here. Arun, thank you so much for being patient with us, but two big breaking news, so had to make you wait. Apologies for doing that. Just wondering, what do you make of this verdict? I mean, a lot of CEOs had said that it would be nice to not have ArcelorMittal in the backyard of in the Indian backyard as an added competition, because large global company. Now it seems like one more hurdle cleared. What does this do, and what do you, if you have a views on the verdict that has been given out, because it will impact lenders as well?
Yeah, so I have been waiting for you, so maybe I have not been able to look at the order, but whatever I heard, I could understand that yes, one of the hurdle for them is cleared. And about the competition, I don't want to say anything as of now, but yes, I have to look at the order and maybe understand the implications. But the process should go on. At some point of time, we have to have the sanctity of this entire process. And yes, the operation, the creditor, how much they get, and banks, how much they get. And I think all these things we have to look at the order. And as you said, that it may take time to understand the implication of this. So as of now, my only wish is that the entire process should go smooth and people should have faith in this process, so that that it continues and so many such cases get solved.
All right. From a market standpoint and from a standpoint of the banks having exposure to SR Steel, how does one read into this?
So as you said that already you have seen some corrections, and obviously every creditor would want a larger pie of the whatever cake is. So as of now, unless again we read the order, we understand how the distribution is going to be, and maybe going ahead there will be more such cases, and the lenders have to get their share of pie and in a way which is acceptable to all the stakeholders. So maybe we have to wait and watch. But as I said, the process itself should not be questioned, and there should be a sanctity of the process. I think that is at the end the process should win, so that we know the route, we know that in all such future cases how the resolution is going to take place. So as of now, I want to leave it here.
Okay. You yourself said that you wanted to talk about a few things with relation to the budget and what is the expectation from the budget this time around. What's your sense? I mean, we're talking about retaining the fiscal deficit or probably seeing a little bit of a push towards 3.6%?
Yeah, so there are two schools of thought. That one is that yes, whatever they promise in the interim budget and the credibility of that should be maintained, and they are going to maintain. Obviously, the other side, the other philosophy is that even if they slip by 20 basis point and all, because the growth is also equally important. So maybe both sides hold a view, and as of now, it seems that they would retain 3.4, and they may try to increase the revenue from higher disinvestments, taking bold steps, looking at corporatization of bigger PSUs and all that. So maybe they will look at the revenue side and get more money. And at the same time, there are other things like corporate tax and all from the expectations from the budget, and maybe on the rural side, more allocation, maybe on some sectors like automobile and all, they will do something. On personal tax, there are expectations, and the ease of regulatory access is another theme which is going to be predominant. So these are some of the areas which we are quite positive. The idea is that now a stable government is in place, and they have to do some bolder reforms, and maybe the market will be looking at it.
All right. Just one last question before we let you go. With regards to the overall opinion that the investment in the financial space is something that you need to go by. Where would you put your money? Within the private sector banks, or the fact that you could see some turnaround within the public sector banks as well?
So we are talking about private sector bank with corporate focus as well as the retail focus. Retail focus, obviously, we were talking for quite a long time, and in the recent time we are saying with the corporate focus also, because again the NPA cycles have bottomed out, and they have also got a good CASA base. And even within the NBFCs, there are one or two NBFCs which has got better ALM. So maybe look at that space also. So I think this is our segment where the investors are putting money, and that is one of our calls also, that private banks with retail as well as corporate focus, and that's where we stand. And NBFC pain also, we have to see how the government in the budget also, how they look at it. Maybe the what merger like Capital First and IDFC, and maybe whether LVB and Indiabulls also, this also will be a positive news for the market, because this is one solution for ailing NBFC to get a lower cost of fund. But till that time, I think private banks will have a good run, and maybe going on, they will have some competition for more NBFCs.
Okay, we'll leave it at that, Mr. Thukral. Thanks very much for joining us. Really appreciate you taking out the time. Back to the markets then, and full tilt, taking a look at what's been happening on the indices and what's gaining and what's losing right now. The star performer on the Nifty 50 is UPL. Nifty itself is at the day's high right now at 11,960. UPL 7.5% higher, and you can see how gradual the move has been right from the word go. It's been on a progressive track, 700 right now after seeing 7 straight days of gains nonetheless. Rahul, Randeria, independent market expert, he's joining us on the show. Along with him, Hadrien Mendonca of IIFL is also here with us on the show. Gentlemen, good afternoon to the both of you. I'll start off with you, Hadrien, first up. Since we're on the topic of stocks and UPL, which is the star performer on the index today, how would you trade this one? Then we get back down to your index calls.
Yeah, absolutely. UPL, is gone berserk today. In fact, the stock has rallied pretty significantly just after touching its 50-day moving average. If I'm not wrong, the stock is hitting its all-time high once again, and I think it would be best to stay with the momentum. Long positions should definitely be held on to. UPL has been a complete outperformer after a little bit of profit booking that we saw in the previous month. I think the higher top, higher bottom structure has once again resumed, and the higher top has once again been breached. So I think definitely long position should be held on to. A decent 5 to 6% upside from here on cannot be ruled out.
Okay. What about index calls? Say, Hadrien, I'll come to you, and then Rahul's index call as well. What are you doing on the Nifty?
It would always be better to be cautious ahead of a very, very big event that gets unfolded tomorrow. But looking at how the markets are behaving and how the Nifty is actually holding on to its gains, despite a lot of mid caps being under pressure, I think it would be pretty wise to actually not cut onto your long positions. In fact, one can also go ahead and create long positions around these levels. In my opinion, all-time highs can be tested once again, by tomorrow. So I think definitely keeping a stop loss around 11,800 on a pretty conservative basis, one can hold on to your long positions for a target of close to 12,100 odd levels. But yes, this is going to be a pretty high risk, trade, and it is advised only for the brave hearts to go ahead and do this.
Okay. All right. So that's the view coming in on Nifty. Remember, all-time high levels is somewhere about 12,103. But after this level, I'm sure the markets will be watching out for that mark of 12,000. And Rahul, tomorrow being the budget day, is there any position that you would recommend, considering throughout this week we've seen gains coming in for the index, and now it is trading at higher end of the trajectory?
Good afternoon, Nonit. If you look at the last 4 days, the market have been opening with a flat to positive move. Again, it has been consolidating for whole day in a straight line and closing near the same levels. So definitely that trend has been seen in the last 4 days. Even today being a weekly expiry, we have seen a time value play. Both the call writers and put writers are playing on both the sides. So definitely we have not seen any follow-up buying on the indices. Now, we have been giving short calls in last 4-5 trading sessions, but hardly Nifty and Bank Nifty has managed to inch maybe 1.5% higher. So there has seen some sort of tiredness or exhaustion, or market may be waiting out for the budget. And for today, hardly 45 minutes is left. I would not take any call on indices, but definitely at higher levels I would be a seller. Tomorrow, after budget, we will take a fresh call. But yes, definitely we could see some sort of stock-specific action for a positional basis.
Okay, so you're not being a brave heart. You're suggesting book your profits in case if you're in the money. But in terms of stocks, are you recommending anything?
Yeah, I have 2 buy calls. First is a buy in ITC. Want to go for defensive. Definitely at current levels, one can buy with a stop loss of 269. Upside target would be 290. It is a positional call. Second buy call is in Tata Motors. One can buy accumulate at current levels, which is 166, and maybe on corrections to 162 with a stop loss of 154. Upside positional target would be 188.
Okay, Hadrien, what about your individual stock ideas?
Yeah, so I'm going with long and Amara Raja batteries. The stock has been an underperformer throughout, couple of months in the past, and I think on the weekly charts we are seeing a very beautiful falling channel breakout. On the daily charts, we are seeing an extension of the rally that we saw in the previous week. Today's volume participation has been very decent. If you check the delivery quantity that is being delivered into DMATs is actually propping higher on each day. I think Amara Raja batteries merits a buy even around these levels after a good decent run up. I think we are expecting in the near term we could see a target of 665, keeping a stop loss of 631 on the downside. On the other hand, we are slightly bearish on a pharma name, that's Biocon. The stock is in a lower top lower bottom structure, so the stance actually on the stock has to be a sell on a rally. We have seen a good piece of up move in the past 1.5 week, and finally again Biocon is showing signs that it might break below from a rising channel pattern. So I think Biocon seems to be weakening as the day progresses. We are expecting a near-term target of 240, keeping a strict stop loss at 254 on the upside.
All right. We will shortly be joined by Devang Mehta as well with his fundamental views. But in the meantime, let's also get in a banking analyst to understand the implications of the SR Steel order on the lenders. Lalitabh Srivastava of Sharekhan is joining us on the phone line right now. Lalitabh, just want to quickly get your sense on what this implies for the banks that have this exposure. They have already, made provisions to the tune of about 90 to even 100%. What does this order do for them if they're supposed to be getting back just about 60%?
Yeah, first of all, prima facie, this is positive in the sense that, the decision has come in. But apart from the fact that, as you have pointed out, that around 90 to 100% provision was already made, there was expectation of, recovery from this account, and the amount of haircut was much lesser expected. Nearly, half of what the haircut that we are expecting right now. Not only that, the decision to put in operational creditors in at equal pedestal with financial creditors can also impact further cases as well. So in a way, it's kind of a mixed to negative kind of an impact to my mind for most of the infrastructure exposure banks, mainly PSU banks.
Mainly SBI, because that has the largest exposure there.
Yes, SBI has a sizable exposure here. Yes.
So what would you do? Would you want to, probably take a little bit of a safer bet on these PSU names and hold back investment, if at all there were any plans of seeing some investments coming to these PSU banks?
See, most of the PSU banks, we are having a cautious stance. So that should be maintained. Going forward, our investment case on PSU banks is limited to players like State Bank and PNB, and for the time being, we believe that those are the best bets in the space.
All right, Lalita, thank you so very much for joining us. Quick comments there from Lalita Srivastava suggesting that this is slightly more negative for all the banks they're having exposure to SR Steel. Bringing in Devang Mehta of Centrum Wealth Management, he's joining us on the show right now. Devang, quick comments with regards to what you would do right now in terms of taking individual stock positions. Where would you be overweight? Where would you be underweight?
Good afternoon. Thanks for having me on the show. Yes, on a sectoral side, if I can speak, we have been generally overweights. Of course, no marks for guessing something in the private banking space, and a couple of NBFCs which already are, I can say, darlings of the market in the past few years. So we've generally stuck to basics where we prefer more of market leaders, and I think the last one and a half year, at the expense of sounding cliche, I would say that polarization has ruled the markets. So I'll not say that I am across all the market leaders that have done done well. But of course, we stay very put in a lot of stocks where private banks, a lot of corporate banks which came to the fore, some formalization candidates, or some companies which are in FMCG and consumption space. Of course, those have not done well. But this remains the crux of the portfolio, where financialization or formalization or such type of themes would start playing out, and a bit of stock picks in the terms of capex coming back, or cement stocks or capital goods, that also forms a little bit of a part of the portfolio.
Devang, good afternoon. In run-up to the budget, markets have seen some bit of gains. I don't know if this qualifies to be a pre-budget rally or not, but there are certain pockets in run-up to the budget. They've started moving from the likes of PSU banks. There is hope that there would be recapitalization amount being announced to the tune of 40,000 to 50,000 crore. And of course, the other space is the NBFC space, where there is liquidity crisis. Are you expecting any sort of major announcement to come by in the budget for these two sectors?
I think it's a little too much to expect all these things in the budget. A lot of this can also be off-budget items, which probably can be given at any point of time. Recapitalization, of course, a lot of people look at it in the budget statement, if at all they have something in mind. NBFC, I think, is a separate crisis which is still not dealt with. It's more now, rather than a liquidity crisis, it's more a crisis of confidence among the corporates after a lot of accidents which have come to the fore in the last couple of quarters. In fact, it's been a long story which has not come to an end so far. So yes, those spaces are reeling, and of course a lot of people would expect that out of the budget, apart from tax cuts and apart from GST rate rationalization. So all these things are expected, but how much government can put on the table, how much leeway they would have, where they would bring in revenues if they give a lot of tax ops, that remains to be seen. So I think probably market is going into the budget not very light this time. But if I put it in another perspective, only some of the stocks which have sort of rallied have carried Nifty to roughly around 12,000, but still the broader markets are underperforming big time if you look at for even a 3-6 month horizon.
How are you guys at Centrum approaching the NBFC space?
Yeah, as I said, we generally tend to buy more of companies which shows that type of growth. Of course, we are ready to pay that type of a premium. So without sort of recommending any stocks, some of the stocks that belong to client portfolios are the likes of Bajaj Finance or the Bajaj Finsa or something, even like a Canfin Homes, of course, which is into different league. Financials, of course, we like a lot of I can say lending financial institutions like insurance companies. Now HDFC Life or ICICI Pru, or that matter, even SBI Life, here we have seen traction in terms of even premium growth, and as we talk about penetration and density of this sector being extremely low, I think general insurance and life insurance, both as sectors, if you count as even a type of an NBFC, I think they also qualify as a very pure play rather than getting into any credit type of a product.
A few banks, they're doing okay. Corporation Bank, for one, that's moved up about 7.5%. Last 7 days is up 20%. United Bank is up 5.5%. 7-day tally of about 12%. IOB is up 4%, 12% in the last 7 days. UCO Bank. So there has been some interest that's coming about in some of these smaller banks. Rahul, would you take a trade in any of these names?
These are the banks where we have seen, a lack of follow-up buying once, the stock has seen the rallies. So definitely I would not be a buyer at current levels. I will wait for tomorrow and then we'll take a call.
Okay. Real estate as a pocket also. Some boost from the budget expected with regards to affordable housing. If that comes about, you'll actually see some interest coming back into the real estate players here. But would you be a buyer in real estate, Devang?
I think it's again a very difficult space to navigate during bad times, and we have seen only a couple of stocks like Oberoi Realty or sort of, if I can say, Godrej Properties, which probably have sort of just withstood the storm that came in between. My sense, again a very plain vanilla answer to this would be rather than real estate, of course, the government would give a lot of boost to low-cost housing and housing for all. So play the allied stories, play the proxy stories. Of course, cement looks now extremely good in terms of capacity utilizations rising, in terms of even infrastructure on housing growth. If both of those are budget items which are given boost, I think cement as a space looks extremely good. Capital goods, if you count it as also a part of infra, or rather even a bit of capex coming back to the fore, that also would look good. Plus, of course, paints and adhesives with crude coming down and the trajectory not looking to at least go up in a short term. I think also paint and adhesive stocks also qualify the bill if you want to bet on real estate rather than playing direct real estate. The proxy plays would be sort of more suggested than getting there.
Devang, before we let you go, autos is something which has not been performing well. The monthly sales numbers have been lower month after month. How would you approach this space, considering we have seen a lot of correction coming by for these auto companies now?
I think it's a little too exaggerated a space at this point where people are talking about the demand being sort of curtailed or demand not coming back. Our sense is that yes, it's been a little more sort of a prolonged slowdown than people wished. The festive season slowdown was big time. Then it continued in the new calendar year as well as the financial year. To answer your question, I think yes, normally Indian consumer generally postpones the demand, but the aspirational consumer will come back maybe if not one quarter, the second quarter, and the consumption demand that would come in for even two-wheelers and four-wheelers, probably if monsoon is decent, I'll not say good, but if monsoon is decent, and with government, stable government with the next 5 years, with a little bit of boost from the GST side, I think demand can come back. Of course, expecting the GST to come down to 28 to 18 is again a wishful thinking, but probably I think demand coming back and a little bit of confidence or hands in the money in the hands of consumer will first spur I can say small ticket demand and then followed by large ticket or luxury type of demand. So we feel for an investor who has 1.5 to 2 years or horizon, I think these are good prices to start buying and accumulating good quality franchises in the auto business.
We'll leave it at that, Devang. Many thanks for joining in today and giving us your perspective. Really appreciate your time. That's the view from Devang Mehta. Day before the budget, some pockets to watch out for. Before we get in, Gurmeet, Chadha, to talk about specific pockets of strength and weakness, let's get in Soumit Sarkar, because telecom stocks are trading higher today. Maybe not at the highest point, but higher today after the Financial Express did a story quoting the telecom minister as pitching for lower universal service obligation fund. Soumit Sarkar joins us right now to tell us about how much difference would such a move make if the finance minister does indeed reduce the fee. Soumit, is this the reason why the street is excited about telecom stocks today?
Well, yes, that is the reason why we are seeing a surge in the telecom stocks today. So if you see, the Financial Express reported this, quoting the telecom and IT minister, that a letter has been sent to the finance minister asking for a cut in the license fees. Now, the telecom companies currently pay nearly 8% of their adjusted gross revenue as license fees, of which 5% is USOF, that is Universal Service Obligation Fund, and 3% is the general license fee. Now, USOF was notified in 2003, where a fund was created to channelize support for telecom connectivity in rural and remote areas of the country. Now, as rural tele-density has reached nearly 60% as of December 2018, the ministry has urged the finance minister to cut this fee to 3%. Now, among the three private players, whom will this proposed cut of 2 percentage points benefit the most? Well, it will benefit Vodafone Idea the most, followed by Bharti Airtel and Jio. As you can see in the table, in financial year 2019, Vodafone Idea paid USOF of close to 2,100 crore rupees. This was at 5%. Now, if the charges would have been at 3% in financial year 2019, then the company would have saved close to 850 crore rupees, which would have boosted Vodafone Idea's FY19 EBITDA by nearly 16%. Similarly, for Airtel, it would have boosted the FY19 EBITDA by close to 8.6%, while for Jio, the EBITDA would have been higher by nearly 5% if the USOF charges would have been lower at 3%. Now, why is this needed for the telecom companies? Because simply because of the financial stress that the sector has been going through. As you can see, the debt and the leverage ratios of the telecom players are at a high, and this reduction in fees would help the companies going forward. However, do remember that the sector has been reeling under financial stress at least for the last 3 years. Because of this financial stress, the number of private players in the telecom sector have reduced to 3 from 10 at one point of time, and the telecom sector has been asking for this reduction in charges for quite a long time. Now, despite that, there has been no announcement coming in from the government. However, if a reduction does come in this time, it will be positive for the telecom companies.
Okay. So, Soumit, you are effectively saying that while the stocks may have gotten excited, there is not enough reason for there being, there's no enough fundamental reason for the street to be excited.
Well, yes, actually, because so far there has been no announcement, and the sector has been asking this for at least the last 2 years, and still government has not reduced this USOF charges. So the street is expecting that the government will do it, but do remember that the sector has been asking for this cut for a very long time, and still there has been no announcement coming in from the government side so far.
Maybe usual pre-budget excitement that could be coming in.
Versus probability of it actually happening.
Yeah, that's succinctly put. Thanks so much, Somit, for that. Gurmeet Chadha is here with us. Gurmeet, are you excited about Telecom as well? A lot of things, but all hopes, nothing delivered. What would you do with the telcos? They're up today.
So Neeraj, I mean, if you recall our conversation, I think this is one play. We've had discussion. One could be a little contrarian, looking at how cheap the valuations were, and I think it's not just about the fee. I think this will have a short-term impact. I think the entire ARPU, the way it is calculated, is going to change. So there are experts who talk about the 3 C's, which is your calling charges, content, and commerce. So I think how it evolves over a period of time is what most the street would be interested in. I am, moment the industry consolidates, moment there are 2-3 major players, I think the pricing power usually comes back. And I think it's a matter of maybe a few quarters, because if you see even in Reliance, I think the street is concerned on the rising debt levels. And I think they are trying various stuff, including making an invested, raising money. There have been talks of a Aramco deal. Reliance announced the money they've raised overseas. So I think the ARPU levels will go up, and I think this is a good play, because this would be a far more integrated play than what it seems right now. So I would be a buyer in Telecom, provided you have the patience to hold it for a very long period. And a very long period could be 5-7 years kind of an horizon.
Okay, that's the view coming in on the telco space. Let's just pull up the chart of Quess Corp. We just spoke to the management at the start of the show. The stock had actually declined to levels of 18 to 19%. There has been some recovery from the lower levels of the day, but it is still sitting with cuts of about 13%. Management clarifying that they do expect the receivables, which are due to the tune of 150 crore. They are in conversation with the party Trimaz as well as the government entity, and they expect the money to flow into the escrow account in the next 2 to 3 quarters. That's Quess Corp for you, down 13% as we speak. But besides this, which are the other 4 FAB stocks which Sharad Dubey is tracking for the day? Let's go across to him and find out. Hi Sharad, good afternoon.
Good afternoon, Avni. The first stock is definitely going to be IndiaMart. The stock has listed in the bourses today, and the stock is up almost 33%. The stock opened at a premium of almost 21 rupees at around 1180 odd rupees per share, and the issue price was around 973 odd rupees. Up next is Uniply Industries, which is up almost 5% after Kuwait-based company Markab plans to buy 29.21% stake for around 313.84 crores. Now, mind you, the offer price will also be triggered open, and the offer price is almost for the 26% capital, with the offer price set at 82 odd rupees, and the consideration for this will be around 405 odd crore rupees. Up next, we are having Vinati Organics, which is up almost 2.7% after hitting a 52-week high and gaining for the second straight session. And the last stock of the day, we are having Interglobe Aviation, which is up almost 3%, as fresh longs have been seen with a high open interest of around 11 odd percent and volumes trading at 2 times its 20-day average. Back to you.
All right, Sharad, thanks for bringing those Fab 4 stocks of the day. And let me take a technical check on one of the Fab 4 stocks. That's Interglobe Aviation, which has surged in today's trade. Hadrien, on the charts, considering Sharad just highlighted, the volumes are also on the higher side. Would you take a bet on this one?
Yes, absolutely. I'm pretty impressed. The way the stock has very sweetly held on to the 50-day moving average, and was hovering around those same levels for the past 4 trading sessions. Finally, we have seen a big boost of volume coming in, and along with it, we saw a good smart price action as well. I really expect that Indigo can further on extend this momentum that we are seeing today, and we could see the stock moving anyway close to the 1660, 1680 zone. When I say this, I'd like to give a disclaimer that we have already given, a recommendation to our clients on Indigo.
Okay. Another one is Z-Learn. The stock's up about 4%, and following Z-Learn, should pull up a Dish TV also to see whether there's any move there. Z-Learn's up about 4%. Dish TV is up closer to 1%. It made its move in yesterday's session, and Z itself should be pulled up. The stock in today's session is not doing a whole lot much, but has seen a decent enough recovery from levels of about 320 to levels of about 360, which it hit in yesterday's session. Hadrien, anything within the SL Group stocks, Z from the larger pack, Dish TV or Z-Learn from the mid-cap pocket?
I'm really not keeping a track on these stocks. I think it is better to avoid. But, coming to Z-Learn Limited, the stock is really consolidating for the past 2.5 weeks. We are seeing good, amount of volume participation today. But still, the price move that we are expecting is really not coming. So I think still it is continuing to trade within the range. And you really don't want to be, be trading a stock that is really stuck in a trading range. So, it would be an avoid from my end.
Okay. The other stock to monitor is Titan. There's been a downgrade come from Morgan Stanley. It's downgraded the stock from an overweight to an equal weight, but they've still kept their target price the same. And they said there's absolutely nothing wrong fundamentally with the stock, but just that the valuations look slightly more stretched now, and they're not really comfortable with that. Agam Vakil is joining us to take us through more details of the same. Agam.
Right, so the downgrade comes in the light of the fact that their target has been achieved and there isn't as more that could push the multiples forward, as you've already mentioned. Of course, Titan still remains one of their favorite, picks in the long-term play. But given the current financials, they don't see any downside. But they are estimating about 4% increase as far as estimates are concerned. And again, they've already mentioned they put in a price target. They maintain at around 1,300 rupees per share. And as you mentioned, it's been a downgrade to equal weight from overweight. So that's as far as Morgan Stanley stands. It's largely on account of the fact that the target price has been achieved.
Okay, thanks a lot for that, Agam. For 2.8% lower for Titan in the session today. I'll get to Gurmeet fundamentally too, but technically, since it's down 3%, is there a trade that somebody can take now on this, Rahul?
Yeah, definitely. A couple of days back at 1333, we have recommended a sell call with a target of 1240, and still we hold to the target. So at current levels and on pullbacks to maybe 1310, one can sell with a stop loss of 1340 for a target of 1240 on the downside.
Okay, and Gurmeet, fundamentally expensive stock, but worth staying invested in, or would you switch?
So I may not switch, Neeraj, but I think fresh accumulation may not be warranted looking at the run-up in the stock, the way it has happened, especially in last 6 months. I think, but the overall business is looking good. I think their jewelry business, watch, eyewear, some of the other formats seems to be doing well. We spoke about how good a proxy to an SIP book they have in terms of the monthly subscription they run with their client base. But the valuations are and it's almost priced to perfection. So any soft quarter or any small bit of brokerage giving any sort could have a bit of an impact. So maybe if it corrects maybe 5-10% more, one you can add, but staying neutral at these levels. At the same time, not like Titan is more like a buy and forget kind of a allocation for us. And this year it's a long marriage season, so, and the kind of inroads they are making across the price points, which is with Nia at the lower price point and with their jewelry collection at upper price point, there is significant progress, and this entire sector is seeing a lot of formalization. So hold on it for the time being.
Okay, Gurmeet, hold on to Titan. From an expensive stock, I'm moving to a relatively cheaper stock, Gurmeet. And Yes Bank today has touched fresh 52-week low. The stock's trading now in 2 digits. 96 is the level where it currently trades, and it's also at a day's low. Gurmeet, now sub 1 times price to book. What would you suggest?
Namit, I think we've been discussing Yes Bank for a while now, and I'm clearly of the opinion that in an environment like this, anything which has governance issues, anything which has, so I think in Yes Bank now it's a question of what street believing in terms of, are there more skeletons to come out? Will the credit cost guidance would be met? I think clearly the street is not believing that, and I think there is an inverse correlation. More the management clarifies whether it is Yes Bank, whether it is DHFL, whether it's Cox and Kings, we saw today Quess Corp. I think there's an inverse correlation. More the street thinks that there's more, trouble coming in. I've been speaking to a lot of, senior bankers who have been ex-colleagues and now working with Yes Bank without really quoting them. I think their sense is that there could be 1 to 2 quarters of very aggressive provisioning, right? And I think once that happens, once the trust comes in, so the book value itself is under question right now. So my view is that in this fresh slippage cycle, whether it is in terms of more developers defaulting, the ADAG group, some of the others, I think you would see aggressive provisioning, happening. So I think maybe wait for another quarter, let things stabilize, and then probably get in. These value traps where you are seeing stocks fall 70-80%. We have seen that with Manpasan, seen that with Vakaranji, seen that with the host of examples we discussed, are best avoided during these times.
Okay, but from a technical standpoint, quickly, Hadrien, on Yes Bank.
Wow, Yes Bank, has done something that, we were really not expecting it would do. It has actually broken the 20 June lows of, 98.7, which it hit back then. Keeping that as a stop loss, we've seen a lot of stop losses hit today in trade, and we have seen, aggressive amount of selling pressure as well. So I think, post the breach of 98 levels, that was a very important support. I think Yes Bank has actually seen a fresh breakdown. Long traders should really avoid Yes Bank and, really not enter at these levels. Traders who already have Yes Bank at higher levels have no other option but to hold on to the same because, averaging is not a very good option around these levels. So, it's a complete avoid from my end.
Okay, gentlemen, stay on. So much more to talk about. But first, let's take stock of what dealing rooms are recommending in the session today. Darshan Mehta is here with his channel checks. Darshan, penultimate day to the budget. What is it that your sources are telling you?
Yeah, so one of the counters which has done extremely well today is UPL, which is up almost 7% the last time I checked. Over the past few days, there have been, and it goes X bonus, so that's why from the 1,000 levels, it's at 700. Nevertheless, there were a lot of concerns in terms of what could happen, and the counter had corrected significantly. Of late, the management has been meeting a lot of funds, and there has been a lot of clarification. So there is a bit of domestic fund buying that's happening on UPL. On the other hand, when the market seems to be doing well for itself, Piramal Enterprises is down 4% in trade. Some of the HNIs have started taking short positions in the counter at higher levels. So there is a little bit of short positionings that happening. And the big listing today is IndiaMart, opened at a big premium. Dealers do indicate that valuations still are attractive, and there is a lot of HNI accumulation that's happening. They believe that the momentum will continue on IndiaMart.
All right, Darshan, thanks very much for that. That is a quick dealing room check. In fact, IndiaMart, since we're on that topic, Gurmeet, a listing premium for about 33%. This beats Polycab. I think Polycab ended with a closer to 20% premium. But looks like the stock is really exciting investors.
I have we have dealt with them in my previous capacity in banks, in wealth and investment banking side. I think the business model is good. It's largely a B2B online place, and if you see their market share in terms of the classic fields, online classic fields, almost 60%. And there are two revenue models. One is a paid subscription model, which is monthly, quarterly, and long term, where the providers for products and services interact, and then there is the advertising revenue. I think if you see last 4 or 5 years, in the way I've been tracking it more in my previous capacity, is that there is a very healthy growth of 27 to 30% in revenues. But of late, what we have seen is there is a big competition coming from a lot of startups. There is Ninja Card, there are some of the others. And this particular business is prone to a lot of disruption. And if you look at the overall financials, I think if I recollect correctly, last year PAT was about 20 odd crores. So some disruption here and there can optically make the numbers look, quite up and down. So my view is that this since the model is more B2B, prone to a lot of disruptions. May not be good for a retail investor to take a long-term view on it. Somebody has made some listing gains from an IPO perspective, makes sense. But not advising people to add this from a fundamental point of view.
Okay, well, we're speaking of fundamental ideas and markets. Let's hear into veteran emerging market investor Mark Mobius on the stocks and sectors that he finds attractive in India.
Infrastructure as an industry is something that you have been liking for some time now, particularly the pipe makers and steel manufacturers, and that was our conversation last time. Is that a space which
That's
is
right.
still a favorite, and on the back of the fact that you could see some favorable budgetary announcements with a push to infrastructure, does that continue to remain an overweight for you?
Yes, that's continuing to be overweight, and we're looking at a number of companies in those areas, infrastructure related. You mentioned pipes, cables, that sort of thing.
The other pocket of this also that you have been talking about has been the NBFC space. Now, obviously, the liquidity constraints may not be as bad as they were some time ago, but it's still bogging down the system. Do you think that now is the time to probably start picking and choosing from the leftover good quality NBFC names and starting to add more weight in each individual portfolio?
I'm glad you mentioned that, because that's the other area we're looking at, the non-bank financial institutions. We believe that there's some bargains in that area as a result of the problems they've had. And of course, with liquidity coming back with the new reforms, these companies should do fairly well. By the way, don't forget, these payments to farmers, which will be coming in, will improve consumer companies. And that's the reason why you see many of these consumer-oriented company stocks doing so well. But that also means that these companies that are serving that sector will be able to pay back their debts, and that will help the non-bank financial institutions.
All right, well, bullish on NBFCs too, selectively. Wonder if he would have been bullish on real estate, because those stocks seem to be doing okay for themselves today too. It's closing strategy, so let's do that, and then I would probably ask for some views on the real estate names as well. But first, the closing strategies. So Rahul, to you first, your top closing strategy. One idea.
Yeah, I have a buy call in Grasim. One can buy at current levels for a target of 965, positional target with a stop loss of 930.
Okay, so buy a Grasim. It's a positional target,
yeah,
but you'd buy it at 941.
Yeah, at current levels.
At current levels. Hadrien, what about you? Your top closing strategy?
Yeah, I'll go with the buy on Siemens. We are observing a flag pattern breakout, at a stock that's at 52-week high. You really don't want to miss a high momentum stock like Siemens. So I'm recommending to go long on Siemens for a target of 1380 to 1385, keeping a stop loss at 1345.
And you like real estate names? Maybe one or two you want to share? Which is the top favorite?
Yeah, I have two buy calls. First is in Godrej Properties. The stock was beaten down in last 3 days from the levels of 1120, and currently it is just quoting near its multiple support zone. So again, I feel that in next 3 to 4 months, again the stock has potential to test the level of 1120. One can accumulate the stock at 947 and on corrections to 920 with a stop loss below 910 for the positional target of 1120. And another buy call is in NBCC. One can buy at current levels for the target of 67 with a stop loss of 58 on the downside.
Okay, those are some technical ideas coming your way. Just pull up Thomas Cook as well. Remember, that's a promoter entity of Quess Corp holding about 48.8% stake. That too fell alongside Quess Corp, though it's recovered from the lows of the day, currently still sitting with cuts of about 8 to 8.5%. Gurmeet, any thoughts on what's happening with the entire group? We spoke to the management of Quess Corp a while back. Street is worried about the receivables of about 150 crore, which management indicated that they're very confident they will recover in the next 3 quarters. If you're tracking these companies, what are your thoughts?
Avoid Navneet, because I think what we have seen in the past is that wherever the accounting is very aggressive, and when any such instance happens, and that's when all the worries start to come to the fore. If you look at the goodwill impairment, if you look at the cost of funds in terms of the related party transactions, they do raise an eyebrow. While you can keep justifying that there's a third party which gives the valuation, and we have seen how this entire thing has played out. My sense would be, let the event play out. It's not a great idea to And more, as I was telling you, the more the clarification comes, more is the inverse correlation. So wherever there is a disclosure governance issue, I think the market is very, very brutal. We've seen that in most of examples, and there's no point trying to go fishing here. I think it's best to avoid. There are very good opportunities on, despite the run up in banks and in insurance stocks and in some of the industrials, so anything which has governance issue, anything which has disclosure issue, it's a complete avoid at this juncture.
Okay, Gurmeet, we'll let you go on that note. Thanks a lot for joining us and taking us through, sharing your thoughts on markets as well as individual stocks with us. Pull up Amara Raja Batteries. That stock's seen gains of about 2 to 2.5%. And the gains, by the way, have come in the second half of the session. Hadrien at 647. Would you take a trade here?
Yes, absolutely. I would take a trader. In fact, this was also one of our calls, which we gave in the initial stage of the show. I think I'll continue to remain long on Amara Raja batteries. We can also extend the target towards 670 to 675 and, take our stop losses higher towards the 635 levels.
All right. Taking a look at some of the other names out there that are doing relatively okay for themselves. So Bharti Airtel for one, that's up about 2.5% right now, and some of the cement stocks are also doing okay. Expectation with regard to some tweaking of taxes for the cement industry in the budget, whether or not that comes about is another case in point. But a quick view, Hadrien, from you on any of these cement majors?
Yes, Ultratech Cement, more specifically looks very, very impressive. In fact, this is the first time the stock has actually, broken out after, just lingering around those 4500, 4550 zone. So I think Ultratech Cement merits a buy around these levels, especially because of the breakout, the falling channel breakout that we are witnessing. Secondly, if you notice, we have very decent volume participation as well. So I think keeping today's low as a stop loss, that is close to 4567, 4565 zone, I think we could see a decent 5 to 6% upside in Ultratech Cement going forward.
Before we wrap up, Rahul, quick 30-second answer each view on both of those stocks. L&T Infotech, which is down in trade, and IndusInd Bank, which has been doing rather okay for itself.
Yeah, IndusInd Bank has given a flag pattern breakout, so stock can inch higher from the current levels. I feel that stock has potential to test the levels of 1550, so one can swing traders can buy at current levels with a stop loss below 1450. On the other side, L&T Infotech has been bearish for last 3 trading sessions. I would be avoiding that call.
You're not even going short there?
It is into oversold territory, so I would wait for some pullback.
Okay, hang on, gentlemen, we'll take in closing thoughts from you, but here's how the markets are shutting shop, and eerily similar to the last few days. I mean, the percentages may differ here and there, but largely lackluster, largely flattish, but some bit of upward bias. So 11,940 or thereabouts is what will close, how we'll close for the index today, before, of course, the budget day tomorrow. The Sensex flattish in trade, the Nifty Bank about 65 odd points, so no big changes really in any of the key large indices. The mid caps, the small caps have done okay, but that hardly speaks anything. I mean, the market rate would maybe be tepid, maybe marginally better, but let's wait and watch. At the start it was reasonably okay. Let's see if it's closing in well. But the large caps, and let's see how they are doing in the session. UPL star mover really, up about 7%. This last few days have been quite scintillating for UPL, to be honest. Bharti is up about 2.5%. Britannia up another 1.5% in the session today. The last few days it's been on a roll. Kotak Bank about 1.5%, Grasim 1.5%, and Indiabulls Housing Finance, yesterday's top gainer, is up another 1.5%. IndusInd Bank to doing okay. What's not doing well? Yes Bank 3% lower, Titan 3% lower, Tata Steel about 3% lower in trade. Remember, the management spoke to us today. There is Z, which is correcting a bit, but metals by and large seem to be in pressure, with Tata Steel, Vedanta, JSW Steel and Hindalco, all of them down. No major cuts, but down. in the session today. So if yesterday was IT correcting, today it's the metals pack which is looking slightly wobbly. But net, a bit of a flattish close on the large cap end. What about the mid cap index? Was very flat, Navneet, even though the small caps gained a bit.
That's right, Neeraj. It was flat, but I think this week has been pretty much good for the markets because we've managed to cross that range that one was talking about for really long. So let me start off with a few gainers from the broader markets. Interglobe Aviation is one of them, which surged today, and there were some longs also seen on the future side for this counter. The stocks closing with gains of about nearly 4% in trade. The PSU banks we've been talking about and run up to the budget in hope of some recap news coming by for these PSU banks. So Bank of Baroda was up 4% yesterday, and today also it registered gains of about 3 to 3.5. Corporation Bank is the other one, which shot up almost 7% in trade and finally closing around the levels of about 27.6. IIFL Finance had a good trading day. This counter rallied about closer to 10 to 11%. Finally, let's check the closing price. Actually, it came off from the high point of the day, so the final closing is coming with gains of about closer to 7%. Battery maker Amara Raja had a good session. In fact, we did have a buy call coming in from Hadrien on the show. Amara Raja closing with gains of 2.5%. IndiaMart, new kid on the block, had a stellar listing today. The stock had a gap up. It opened with some premium today, and finally, let's see where it's going to close. IndiaMart saw gains of about 30 to 33%, and that's the exact level where it will be closing off about 1300. And Bharat Forge went up for the fourth straight day today, so some buying momentum continuing for this counter as well, 3% higher. On the losing side, we spoke to the management of Quess Corp. This counter has been under pressure in the recent past. Throughout the week, we've seen some losses coming by, some bit of recovery from the lower levels, but clearly no respite, 13.5% lower. And the promoter entity, Thomas Cook, which holds about 48.8% stake in the company, that also came under selling pressure, closing with cuts of about closer to 10%. The other stocks which were down today are the likes of Hexaware. That didn't have a great day. Hexaware also saw cuts of about 2 to 2.5%. And we were talking about the fertilizer companies yesterday. Some profit booking coming back today. So Fertilizer and Chemical Travancore, that's the one which fell about 7%. I think this one rose 10 to 11% yesterday. Piramal Enterprises gave up yesterday's gains of about 4%. Today the counter came under selling pressure. It's closing with cuts of 4%. And finally, Tata Power, which was going up in the last few trading sessions, that snapped the 7-day gaining streak, closing around the levels of 72 with cuts of about 2 to 2.5%.
All right, so we are back inching our way closer to the 12,000 mark yet again for the Nifty 50. Today's gains nudges it a little bit further, 11,938. Banks in tow with what the benchmark indices have done, and 100 points short of 40,000 for Sensex. Taking a look at today's big moves and where did they come from within the Nifty 50. So you have your contributors, Kotak Mahindra Bank doing well, Bharti Airtel adding some weight, about 2.5% higher for the stock. UPL though up almost 8%, contribution wise just about 4 odd points. Losing Titan, that Morgan Stanley downgrade that has come in. HDFC Bank 3 straight days now amongst the losers, and Tata Steel and ICICI Bank dragging the index a little bit more.
Well, let's also see how the participation panned out, considering today was the day for the weekly options to expire. And the NSE F&O turnover is close to 20 lakh crore precisely because of the expiry day. But remember, we've seen higher turnover than this. And the NSE cash is currently at about 27 to 28,000 crore. I think we can also pull up the India Volatility Index. I think that's coming off. It's come off from levels of 15, and today it's closing around the levels of 13.5, which has been a very, very comforting sign for the bulls.
All right, quickly get in some comments. Then tomorrow is the big budget day, and whether or not we actually take those positions into the budget or wait it out till all the news has been digested. Hadrien, what's your view?
Yeah, continue to be of the view that we would see and we would expect the Nifty to actually go ahead and test the all-time high levels, or at least come closer to those levels. And keeping a stop loss at 11,800 would be the ideal stop loss on every long position that Nifty July futures would be.
All right. What about you, Rahul?
Yeah, as we discussed earlier, today's day was option writing day. We have seen a flat closing. Tomorrow is a big day as a budget, but looking at the current setup, we would be a seller at the higher levels tomorrow, but only after looking at how the budget is panning out. because the index is been maintained by only hardly 8 to 10 heavyweight stocks. Rest of the stocks are moving in a sideways move, so I would be recommending to set at the higher levels tomorrow after the budget.
Okay. Got that. We leave it at that. Rahul as well as Hadrien, thank you so very much for joining us, the both of you, and sharing your thoughts with us. And on that note, we also wrap up this edition of Countdown from Neeraj, Navneet and myself and the entire team that's put this show together. Thank you so much for watching. Market Wrap comes up next.